I'm Andy Panko, owner of Tenon Financial. Welcome to Retirement Planning Demystified. This video will explain Medicare premium surcharges you may have to pay if you're on Medicare and your gross income is above certain thresholds. But before we start, remember this video is only general explanations and education. It's not specific tax, legal, or investment advice. Before considering acting on anything you see in this video, first consult with your tax, legal, or investment advisor. For 2020, the monthly premium amount for Medicare Part B is $144.60. If you opt to also get prescription drug coverage through Medicare Part D, you'll pay an additional premium for your Part D coverage. But unlike Part B, where there's only one base premium amount that applies to everyone, there are different Part D policies that have different premium amounts. Depending on your level of gross income, you may have to pay additional premium amounts for both Part B and Part D. These premium surcharges are known as IRMAA, or Income-Related Monthly Adjustment Amounts. The measure of income used to determine whether or not you have to pay IRMAA surcharges is called MAGI, or Modified Adjusted Gross Income. You may have heard of MAGI before with regards to other parts of your income taxes, but not all MAGIs are the same. There are various different measures of MAGI used for different things. Assume the definition of MAGI I'm about to discuss applies only to IRMAA surcharges. Your modified adjusted gross income starts by taking your adjusted gross income. Below is the IRS tax return form 1040 for 2019. These forms have changed each of the last few years and may change again in the future. But as of 2019 at least, which is the most recent tax return, adjusted gross income is reported in box 8B. Next, add to that your tax-exempt interest, which is most commonly interest earned on municipal bonds. For purposes of regular federal income tax, interest on such bonds is usually tax-free, but when calculating MAGI for purposes of IRMAA, you have to include it. Again, using the 2019 Form 1040, tax-exempt interest is reported in box 2A. The combination of these two figures is your modified adjusted gross income, or MAGI. One thing to keep in mind is that IRMAA surcharges are based on your MAGI from 2 years prior. Let's look at how IRMAA amounts for 2020 were calculated, and you'll see why there's a 2-year lag. Here's 2019. At the end of that year, let's assume December, the Social Security Administration determined what the base Medicare Part B premiums would be for 2020. They did the determination before 2020 actually started, so everything could be in place and ready to go before the year begins. Also in December, they notified all of the Medicare enrollees what their IRMAA surcharges would be, if any, for 2020. They used MAGIs from people's most recently filed tax returns, which at the time would have been those filed in April of 2019. And those tax returns would have reported MAGIs from 2018. So, as you can see, income from 2018 is what determined 2020 IRMAA amounts, if any. Hence, a 2-year lag. Let's now take a look at the actual surcharge amounts. This table will show the IRMAA surcharges applied in 2020 based on MAGIs from 2018. You should assume these figures can and will increase at some point in the future, but as of now, there has not yet been any formal guidance about how these figures may change. There are 2 different sets of thresholds. One for those who file tax returns as single, head of household, qualifying widow or widower, or married filing separately. And then there's one for those who are married and file a joint return. For single and the other filing statuses, if MAGI was $87,000 or below, there are no 2020 IRMAA surcharges. You'll only have to pay the base $144.60 per month premium for Medicare Part B and whatever base premium your Part D plan has. For married filing joint taxpayers, if MAGI was $174,000 or below, there are no 2020 IRMAA surcharges. It's important to note that there's a gotcha if you're married and file separate returns. In order for this table of thresholds to apply, you must live apart from your spouse for the entire year. Otherwise, there are really punitive surcharges that come into effect once your MAGI is even 1 cent over the $87,000 threshold. After the first MAGI thresholds are a series of incremental thresholds, each of which has a progressively higher IRMAA surcharge. For single, the second threshold goes up to a MAGI of $109,000. For married, it's up to $218,000. The third threshold goes up to $136,000 and $272,000 respectively. The fourth threshold tops out at either $163,000 or $326,000. The fifth threshold hits its caps at $500,000 and $750,000 respectively, and then the last thresholds are MAGIs above $500,000 and $750,000. Let's look at a quick example. Assume you were single in 2018 and your MAGI was $120,000. That would put you squarely in the third threshold, which has a 2020 Part B IRMAA surcharge of $144.60. That surcharge is the same amount as the base Part B premium you already have to pay. So in this case, you'd be paying exactly double each month for your Part B premiums. In total, your monthly Part B premiums in 2020 would be $289.20. Furthermore, if you have Part D coverage, you'd have to pay an additional $31.50 surcharge on top of whatever your base Part D premium is. As you can see, these surcharges get really steep if you have high gross incomes. Now granted, most retirees don't have incomes that are in the $500,000 a year range, but if you do, it makes your Medicare premiums about 2.5 times more expensive. And that brings me to my next point. What happens if your income 2 years ago was unusually high for some one-off reason, or at least higher than it's expected to be going forward, like if you have since retired and your income is now significantly less because you are no longer earning wages? Well, thankfully, the Social Security Administration has a process that lets you get your MAGI reassessed and your IRMAA surcharges lowered or eliminated if you can prove that your income has since gone down due to a qualifying life-changing event. You can do this through filling out and mailing in Form SSA 44. Specifically, there are 8 life-changing events that may qualify for a reduction of your IRMAA surcharges. These 8 events are marriage, divorce or annulment, death of your spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, and employer settlement payment. The Social Security Administration is kind enough to give examples of what types of things would qualify for each of these 8 events. Marriage is self-explanatory. This would matter because recall that married filing jointly has larger MAGI thresholds than filing single. So all else equal, if you're getting hit with IRMAA surcharges but have married since your last tax return, you should definitely use this form to notify the Social Security Administration of your marriage, as it will potentially reduce or get rid of IRMAA for you. Divorce or annulment is also self-explanatory, as is death of a spouse. Next is work stoppage or reduction. This is where retirement would come into play. Assume 2018 was your last year of work before you completely retired. You were probably earning a lot in that last year, so your 2018 MAGI was presumably fairly high, which means your IRMAA surcharges for 2020 could also be large because of your 2018 MAGI. But your actual income now could be only a fraction of what it was 2 years ago when you were still working. So it's unfair that you now have to pay Medicare surcharges as if you were still earning that much. You can use Form SSA 44 to notify the Social Security Administration that you have since retired, and would also tell them what your current annual income is. If your current income is lower than whatever threshold you were in based on your 2018 MAGI, your IRMAA will get reduced or eliminated accordingly. The same thing happens if you quasi-retire, meaning you didn't completely stop work but instead reduced your hours or quit a full-time job and started a part-time job. You can get your IRMAA changed to reflect your current level of income. Loss of income-producing property is another qualified life-changing event, but note that it has to be a loss of property that was not at your discretion. Like if you owned a rental property that was since destroyed by a natural disaster and is therefore no longer producing rental income, that would be a qualifying life-changing event. But on the other hand, if you just simply sell a rental property because you no longer want it, that would not qualify for an IRMAA reassessment. Even if you no longer have the property or the income it generated, you'd still be stuck paying IRMAA surcharges based on whatever your reported income was, inclusive of the rental income from 2 years prior. Next is loss of pension income, which is also kind of self-explanatory. This is if your pension plan goes bankrupt, terminates, or otherwise reduces the amount of money it pays to you. The last life-changing event is employer settlement payment. This would be if you received a one-off settlement payment from your employer going bankrupt or reorganizing. You can get your IRMAA surcharges reassessed if you had a one-time spike in income because of such a settlement. Keep in mind that not all one-time spikes in income are eligible for IRMAA reassessments. Only the 8 things mentioned here are qualifying life-changing events. As an example, if you did a large one-time Roth conversion in 2018 and it spiked your income, you're stuck. Your 2020 IRMAA surcharges will be based on your 2018 MAGI without exception. But the IRMAA process is recalculated each year and therefore reflects each year's tax return. So even if you had a one-time spike in income in 2018 and therefore IRMAA surcharges applied in 2020, Your IRMAA may go away in 2021 if your 2019 MAGI decreased from what it was in 2018. Just because you're hit with IRMAA in 1 year doesn't mean you'll be hit with it for the rest of your life. This means there are lots of tax planning opportunities to try to carefully manage your MAGI if you're on Medicare. Now, I won't get into the details in this video, but the gist is that you want to carefully manage how much taxable gross income you have starting 2 years prior to when you start Medicare. And for those of you doing Roth conversions as a way to reduce your long-term taxes, pay real close attention to how much you convert each year and how those conversions may increase your MAGI. You want to try to steer clear of bumping your MAGI above the IRMAA thresholds. Well, that's it for understanding Medicare premium surcharges. I hope you found this video helpful. If you haven't already, subscribe to this channel so you can be the first to know when new videos are posted. And don't forget to subscribe to my monthly newsletter, Retirement Planning Insights, which provides informative retirement planning tips and info. Also, be sure to join my free Facebook group, Taxes in Retirement, where you can get answers to all your retirement-related tax questions. Thanks for watching. I'll see you soon.